about stocks this week. Small and mid-cap stocks outshine. We'll tell you what your strategy should be. Prakash Diwan tells you why you should be investing in Torrent Power for the long term. And what do we do with Coal India? Let's find out on the show. Now, welcome to All About Stocks. I'm Faye D'Souza. This is a show meant for long-term retail investors. So over the next half hour, you should grab a pen and a piece of paper and write down the names of the stocks you hear on the show. Remember, this is the only show in the industry that actually tracks all of its recommendations, and we'll tell you how each recommendation is doing going forward. We'll also answer questions you sent in during the week. Email ID is at the bottom of your screen. If you have any question about your stocks, you can also reach me personally on Twitter. Ajay is here to give us an update on all of the action on Dalal Street this week. Ajay, take us through what happened.
Well, Faye, consolidation and mild sideways trade was the name of the game of Indian equities this particular week. On the one hand, Nifty was finding it difficult to convincingly move upwards of 8150 or upward between 81 to 8200. It was not really falling all that badly towards the 8000 mark as well. So large caps select pockets were slightly range bound to languishing this trade. On the one hand, local traders were nervous, looking at the sharp surge in dollar index, which was having an impact on our local currency. At the same time, the negatives of that were being made up because of a equally sharp fall in crude oil prices and a lot of industrial grade metal prices, which make up for the raw material for the Indian industry. On the other hand, of course, the fund flows also were mixed. There was not a consistent pattern of fund flows from the overseas investors this particular week. However, the mid-cap end of the market and small-cap end of the market continued to remain extremely buoyant. Almost each day you saw a different theme ruling the market, be it auto ancillaries, shipping. Many other themes were really coming to fore, which were witnessing high volume trade, which indicated that the market is active and buying is happening at lower levels. Going forward, well, the market, most of the strategists believe that it will be the FOMC meet, IIP data, CPI data, which will really be giving direction to the market going forward. But overall, market remains a buying on a dip market right now. However, we are at elevated levels, so any rude shock from global cues may actually equally have a negative impact on Indian markets as well.
All right, Ajay, thank you for that update. Joining us in the studio, Prakash Diwan, Director at Altamount Capital Management. Prakash, interesting week at the markets. I have a couple of questions for you. Large caps didn't do much, like Ajay was telling us, but we saw the mid cap sort of gallop forward. A lot of retail investors will now be tempted to sort of add more mid caps into their portfolio. Is it wise? Is there more steam left in mid caps right now?
If you ask me, the market has become so stock specific that the answer is yes and no. Yes. But to make things simpler for the investors, yes, there is value in mid caps relatively much more than what you would have in large caps. For the simple reason that every bull run, every up move in the market typically sees the large cap stocks getting accumulated first by institutional investors because there's always more opportunity, the upside is higher. Once the requirement is met with, allocations are done with, you start looking for opportunities within the next level. And that's why if you see the second phase has started involving the larger mid caps. The good names like a CESC, Voltas, Havels. So it's not the small cap, the very small companies that have kind of started participating in. And these are companies which have a very good track record. They've had a price history which you are familiar with. So when they're down 60% from their from their peak levels, and they've just started moving up, you know that it's not into unreal territory that you're buying them into. So people are happy to buy a stock which has a familiar price history. Right. And that's one of the reasons why some of the ones which have had varying degrees of movements in their prices have been still lapped up by the market.
All right. I want to pull up the mid-cap index so our viewers get an idea of what we're talking about. That's on your screen right now. Prakash, tell us this. When you say that there is some value in some stocks, not in some others, if we talk about auto and auto yes. ancillary, both in mid and large cap, that's really run away. The auto index, has hit another all-time high. Do you think it makes sense right now for us to start moving money into perhaps sectors and stocks that haven't run up as much?
It makes sense. Logically, whatever has run up, provided there's not much room for further run-ups, you don't need to look at. And to be honest, Autos have run up more on expectation of a change in consumption. Look at the two-wheeler stocks. Suddenly it seems like, two-wheelers are going to be sold, as easily as potatoes and onions. But every company that's supplying to the auto OEMs or the manufacturer is also riding on the curve, whereas the profitability of some of them is really questionable. What happens is when a Bharat Forge and a Motherson Sumi do well, you start feeling the entire industry is going to rock. But you need to be very careful, and that's why I say it's so stock specific. And coming to the question of what's not run up, there's much more that's not run up, to be honest. You look at cement, while yes, there's been a little bit of an up move from where they used to be, there's still a huge headroom for growth. You look at fertilizers, agri-chemicals, you look at chemicals itself, you look at some of the export-oriented engineering businesses, look at IT. Where's IT run up? I mean, we're talking about IT still struggling where they were, except for some peaks which TCS makes or a Tech Mahindra is sitting on. But the smaller IT companies still have a long way to go.
Just so I've understood this correctly, you're telling us right now to book some profits in auto and auto ancillaries,
yes,
and buy these other sectors. Also tell me about oil. Is oil done right now? Do you expect it to start moving up at some point, or should we now turn our focus again towards other sectors?
No, within the larger oil and gas pack, I think the gas portion is still to play out. And very clearly because the gas pricing issue is still uncertain, or is still kind of undecided, which would mean it would benefit the likes of an ONGC, Reliance, and the IGLs, Petronets of the world. Gas authority for that matter. A lot of these companies are dependent on what's going to happen to gas eventually as a commodity. Whereas if you look at the OMCs, they've already done their bit. I mean, it's all known. There's no surprise left out there. And in fact, with crude being so soft, one of the issues that people are not realizing is it's going to impact refining margins in a significant way. Refining margins are a percentile of the overall volume of crude that you manage in refineries. And by virtue of that, Reliance, BPCL, ONGC will all get impacted to some extent. BPCL has a fair amount of refining business. It's not just an oil marketing company. So I don't know whether at this level it's justified to keep on buying more of things like BPCL. But the likes of an ONGC, Oil India would benefit from other triggers that are in the way. But gas is going to be the next big change in oil and gas. So take oil out, just keep it as gas, and it's still promising.
So tell me this, at the current levels right now, do you think it makes sense for us to buy more RIL?
RIL would have a tough quarter, at least this time around, September end. For the simple reason, as I said, crude has been really soft. They would actually have to take a hit on the margins. So that's been the only story that's been holding them. But surprisingly, the stock doesn't react to that expectation as yet. But the big trigger in Reliance as a stock is the telecom unfolding. Yes. And then if that were to get closer to launch at some stage, you really have another element in the SOTP valuation that everybody loves to do. And you could add anything. You could add $200, $150 to the price, to the NAV, and that is a big change. So RIL is poised at that juncture where it could actually deliver quite a bit, while there is a little bit of a downside risk also. But the downside risk is capped because it's only going to be 1 or 2 weak quarters.
For those of us who are holding consumer stocks in our portfolio, can we expect more of this run-up, or would you say quickly take some money off the table on Monday morning?
Yeah, what needs to be done is move into the second-tier consumption stocks. And by virtue of that, what I mean is wherever you reach a 40+ multiple, yes, you can't kind of flog that horse too long. I mean, and it's kind of expecting an HUL and an ITC to keep on delivering on a large base forever, which at times gets unreal. So you have the likes of Dabur. Dabur, for instance, in the last 1 year has quietly grown phenomenally, which people don't realize, and it's never talked about. Every time you are into an HUL, ITC, Britannia, it's almost doubled. Yes. I mean, again, that's so quiet. Marico, which is yet to grow, but of course, with the unlocking of the Kaya business, you see if you add the total value that it has created, it's huge. So I think there is enough merit in looking at the second-tier consumer stocks. Godrej is one play, which I think is very clearly Bajaj Corp. Some of these are still undervalued or haven't seen that kind of participation or the momentum that liquidity brings in. And sheer liquidity in some of the counters takes things, into those unreal zone. So, I mean, hopefully that won't happen to these stocks, but I'm just saying that you don't need to be getting carried away when, unreal money chases a few stocks which are at premium and feel, you're going to make money further on.
I want to bring up Prakash's report card. Now, Prakash recommended Cox and Kings on this show on the 17th of January earlier this year. It was trading at 141 rupees with a target of 200 for 1 year. That stock on your screen right now is roundabout at 300 rupees. Prakash, thank you so much for that strong recommendation. What should we do with Cox and Kings now?
No, I think it's a great story. It surprised me also quite a bit. You can see I've been off the mark actually, and really with a large margin. But the way it's unfolding, it's actually relying a lot on the kind of traffic growth that we are seeing for the student population into the UK, and which is one of the mainstay markets. And the other thing is they've been able to deleverage themselves very timely. They've been able to expand the kind of pricing that they have managed to maintain. The margins have improved so much in the last 2 quarters. I think the stock should probably be 360 in another 2 quarters.
So hold on to that stock and wait for 360. Now, Prakash has been kind enough to bring us another recommendation for this week. He recommends Torrent Power. It's trading at 164. Now, the stock has been climbing up for the last couple of weeks. How much more do you expect it to move up, and why does it make your list for this week?
You know, actually, if you see, Torrent Power came down all the way from 165, 170, went back to about 141, sub 140 levels. It's just because of this news flow related to an acquisition that people think it's moved up. But the real interesting part about Torrent Power is its business model itself. Now, this is a company that's largely a distribution expert. This is the same company that used to be an Ahmedabad electricity company and a Surat electricity company, and this was bought out by the Torrent Group. They privatized it. And their specialization has been, the hallmark has been stopping leakages in the city distribution network. Okay. They've innovated a lot on metering technology, which just doesn't let you, so if there's any leakage, actually the meter just stops, the electricity gets cut off. Okay. And the moment that happens, you have, consumer, so it's like a self-correcting methodology of sorts. Nobody lets the other guy get into, this thing, illegal usage of power. And the metering technology that they've innovated is fairly fail-safe. And what I think is going to happen is, if you notice what the government is trying to do, they want to make a lot of other cities very efficient in power availability. If you start with the UP market, which is one of the most grossly abused power consumption market, like Kanpur. Apparently more than 16% people don't actually pay for, so only 16% guys pay, the rest actually don't pay for power. So, you can imagine what could happen if it were to change. And Torrent is going to be getting into these markets at some stage very soon. And if that were to happen, the scalability that they have is probably 6 times of what they're doing, 10 times, I don't know, depending on how competitive they want. Then it's a very nice balance sheet, not much of leverage. But I said 215 as a target in 9 months because of the kind of growth that they're already onto. If that happens, it could be a multi-bagger in the long run.
All right, a possible multi-bagger in the long run. Torrent Power, there's Prakash's recommendation for this week. It's time for a quick break, but stay with us. When we come back, we'll take a look at Prakash's own portfolio. We'll talk about stocks like Tata Steel, M&M, and like I promised, Coal India. Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. Prakash Diwan is still with us. And for those of you who just tuned in, we're talking about stocks for long-term portfolios. Now, Prakash designed a portfolio himself on this show. It's currently at an overall gain of 35.5%. This portfolio was designed on the 30th of November 2012. The Nifty over the same period is up 37%. So we're about 2% lower than the Nifty. I'm going to give you a list of the stocks in this portfolio. Gujarat Pipavav up 155% since we bought it. Tech Mahindra up 81%. RIL, Cipla, Coal India, ITC, M&M and Tata Steel. Now, Prakash, obviously, so many stocks in your portfolio are doing so well. Gujarat Pipavav, Tech Mahindra, M&M is up 47%, Tata Steel is up 34%. What do we do with Coal India?
I know this shows one lemon in the portfolio could drag things down so much. But, I still inherently believe Coal India has the potential. Again, it's something that's extremely sensitive to regulatory changes. And that's one of the reasons why from 2012 November to, let's say, May or June of this year, there's nothing that was happening positively. But if you see the kind of moves that are set afoot by the new government, very clearly either Coal India would have to be forced to go through a restructuring, which means it could be broken down into some meaningful companies with more focused objectives, or it gets efficient on an overall basis with the industrial relations getting in place. Now, either of those outcomes are positive. And mind you, even this coal deallocation, coal block deallocation that the Supreme Court has announced, and the re-auctioning is going to be favorable for Coal India. So, in a way, it's a win-win moving forward, and that's one of the reasons why the government's also been emboldened enough to set off 10% of equity for Coal India as part of the divestment that they've announced. They could have done 5% and later...
So tell me this, we've had these conversations in the past, we've been doing the show together now for 3 years. You've always talked about the fact that if there's a lot of policy intervention in a particular sector, there's a risk of policy volatility, don't buy. Isn't Coal India by definition a stock with policy volatility?
That's true, but it also represents... it's right on the top of the pyramid when energy is concerned. Now, if you have a portfolio which is completely devoid of something as critical as a player which represents which is a proxy to the energy sector, in an energy deficient market like ours, it's going to be slightly imbalanced. Now, if just look at it the other way around.
Torrent Power, like you just recommended?
Yeah, so Torrent Power is a very balanced portfolio, but it will still go through its phase of sensitivity to regulations. It's now that the new government is talking about improvement in this. Otherwise, Torrent Power has been languishing in this zone for a long time, and of course, it's been growing organically in its parent businesses. But Coal India, if you were to take this argument and say if regulations were favorable, Coal India would have probably been 2 or 3 times of its value in the last few years. So, it cuts both ways, but I'm still a believer that in the long term, these asset-rich kind of companies which are there, even if they have regulatory impact or sensitivity, probably will deliver.
Also, very quickly, I want to ask you about Gujarat Pipavav, 155% since we bought it. Would you like to take some money off the table? How much more can we expect from that stock?
I think with the focus that the government has on, this Make in India platform that we are moving towards, and very clearly the Prime Minister himself advocating that we need a stronger export orientation, means that ports are going to be the in thing. In fact, I'm a firm believer that shipping, ports, port logistics are going to be the next big sectors within the infra space. So you'll probably after a while forget power and roads and some of those other commonly known segments. Gujarat Pipavav could probably continue doing well even further, so I would continue holding it on the portfolio.
All right, so we're holding that stock as well. I'm going to give you a recap of the stocks in Prakash's portfolio if you'd like to write them down. Gujarat Pipavav at 10%, Tata Steel, Tech Mahindra, RIL, Cipla, Coal India, ITC and M&M. If you have questions for Prakash about that portfolio, feel free to write to us on the email ID that's at the bottom of your screen. Let's answer a few of the questions you sent in. Purvin has written in 150 shares of Bharti Infratel at 210 rupees. Should I continue to hold or sell? What's your call?
I think it's a nice 40% profit, but so there could be a temptation to move out. But I think Bharti Infratel is going to be a key beneficiary of this consolidation that's likely in the Indian tower space, the telecom tower space, especially with Vodafone very clearly wanting to lighten its asset base. And there's some 25,000 towers that are up for grabs. If Bharti gets in there, you have of course, CCI permitting because it becomes a monopoly of sorts. But the other operational change that's going to happen is with low cost of diesel, actually the efficiency, the cost of running a tower comes down. But they actually run on LD, the light diesel oil. It's not any electricity supply. So that could also be a benefit. So keep on holding. I think another level could be about 330, 325.
All right, so good news for you. Continue to hold that one. Raghavendra has written in 500 shares of Manappuram Finance at 27.65 and 1500 shares of Ashok Leyland at 36 rupees. Should I hold or sell Manappuram Finance?
Personally, I don't like these gold finance companies, but they've always delivered. So I wouldn't really, feel it's unfair.
So we were talking about the fact that gold is down about 18% over the last 1 year. What does this mean for this sort of a company?
No, it should have impacted it much more severely. But the reason why they're insulated is because the LTV is much lower than the value of gold that they sit on. And that really kind of especially thanks to RBI's intervention 2 years back.
So just for our viewers who didn't understand, LTV is the loan value that's handed out for the gold.
Yeah,
so you give me about 60% of the value.
Yes. Earlier that used to be almost like 90%. So they were impacted. So that's why one of them took a big hit. I don't know whether it was Muthoot or Manappuram, but that whole negative impact was felt. Now that gold is softened, what's the other thing that's happening is that people are not going to sell at lower prices. So the use of gold which is lying with you tends to actually make them go more for these kind of loans. You're not going to sell gold. Yeah. One option was otherwise, if gold was very steep, you have the option of selling gold and taking the money. But if it's not very high price, you would rather loan it and use that money.
All right. And also Ashok Leyland at 36.
I think it's a brilliant story. It still has enough legs. They've been the only company or group that has actually done enough to deleverage. They've sold out non-core assets very clinically, including shares in some of the very profitable businesses. And finally, the traction that they've seen in some of their segments, leadership segments like the Dost model that they produced, they've leveraged that very effectively. I think it could probably go all the way to $50 in the near future.
All right, so hold on to that stock as well. Raman has written he has 500 shares of South Indian Bank, which he bought at 31 rupees, and 300 shares of IFCI, which he bought at 40 rupees. Should he hold on to that stock? Now, the government plans to hike its IFCI stake to 51% and infuse 60 crore rupees. What's your recommendation on IFCI right now?
I think, given the kind of portfolio that it has, the government would want to resuscitate or do something to revive this entire institution. And given the need for larger banking organizations in the setup, I think the government will take it very seriously. It's been kind of ignored for lack of funds, lack of initiative, whatever. But IFCI could probably, if not like an IDFC, but could go the same path. But we will have to wait for at least 2 to 3 years for that to happen.
All right, what about South Indian Bank?
Yeah, so South Indian Bank also, I think it's one of the beneficiaries of this remittance business that keeps on coming in the from the Gulf. But I'm not very particularly impressed by the fact that it hasn't grown in spite of having some leadership segments. If you look at some of the other smaller banks like Dhanlaxmi Bank or DCB for that matter, they've grown much more in terms of their book, their NIMs, their CASA deposits. South Indian Bank is kind of let people down of sorts. So I wouldn't mind getting out of it and then switching into, let's say, Dhanlaxmi Bank at sub 50 levels. Of
course, it's time now for our viewer portfolio. Now remember, every week we pick one lucky viewer. We take a look at your entire portfolio. This week, Sai Krishna Reddy is our lucky viewer. We're going to take this sort of like a rapid fire because we're running out of time on the show. Now, he sent us a list of the stocks in his portfolio. He's a long-term investor. He wants to know which of these he should hold on to. Right on top are 100 shares of Hindalco, which he bought at 137 rupees. Hold on to Hindalco?
Absolutely.
50 shares of NMDC, which he bought at 178 rupees. He's losing a little bit of money there. What should he do with NMDC?
No, he has to hold, and it's definitely going to be very promising.
What's the next trigger for NMDC?
Yeah, the next trigger is going to be actually the government finally wanting to get PPP in the mining business also. Now, what's happened is the kind of capabilities that NMDC had were enough to meet all our requirements, but the utilization levels have not been very impressive. So the government will have to get people to expedite that. Otherwise, the downstream business is not going to work.
100 shares of Oil India, which he bought at 614 rupees. That stock is up, but not drastically from where he bought it.
Yeah, it's been a little bit of a letdown given its strength. I would recommend a switch into ONGC at current levels. And ONGC has given you early this week a little bit of a drop after the OFS was announced. So that's an ideal time to get into ONGC.
200 shares of GMR Infra at 33 rupees. That stock is at 25. Of all of the infra bets that he could have taken, would you recommend he holds on to GMR Infra?
See, they're trying hard to correct things, but he's still 25 to 33. I really don't know how soon that will happen. But if you were to take any of the power vendors that we talked about, let's say Torrent Power itself, he'll at least recover his money quicker.
Okay. 100 shares of Subin Life Science, which he bought at 88 rupees. That stock ended the week on your screen right now at 202. So there's a stock for him to be happy with. Hold on to that.
I guess so. Mid-cap pharma has done well, but don't be surprised if it also corrects a bit, given the strong run-up that some of these mid-cap small pharma companies have done. He could probably switch into some of the other ones that are yet to kind of join the bandwagon. You have an Arvind Remedies, which has seen some momentum. You'll probably get into a more sedate kind of a thing like Biocon, which has very low downside risk from where it is, and could deliver some very surprising numbers.
All right, so there you have it. That was the recommendation that Prakash gave us this week. If you have questions or you'd like us to look at your portfolio, write to us. Email ID is on your screen. Prakash, thank you so much for spending the weekend with us. It's always nice to have you. Keep sending in your stock questions and, of course, reach out to me on Twitter. It will be my pleasure to hear from you. Thanks for watching.